While digital payments have taken off in retail across Asia Pacific, B2B adoption is still lagging despite projections that the market will double in size after 2023. Partners Marianne and Namit Goel from Ken Research are here to tell us more. So, Mary, why is B2B digital payment adoption still slower in retail?
So furthermore, the B2B actually is an area that needs to be responded to the regulation that is coming from both local regulatory bodies and corporate governing committee. So it's not an easy task to build and embed a complete compliance components which could respond to a fast changing regulatory environment. And second is from the complexity of the B2B payment processing, because the B2B payment is not as easy as a retail payment. For retail, you just need to map one payer with one payee or beneficiary. But in a complex B2B transaction, such as the escrow account payment, the financial institutions, they need to handle multiple parties, and also they need to execute the payment based on the complex business agreement. According to one of the Gartner surveys, the 54% of the corporate and SME payments are directly associated with the global trade activities. This indicates when the bank plan their payment system modernization, they should not plan the payment systems only, but also needs to extend it to other areas like trade finance, cash-related systems, and also core banking systems.
B2B payments involve larger transaction volume, right? Custom contracts, multi-tier approval workflows. These transactions are invoiced and offered deferred 30 to 90 days credit terms, right? And are tied to a delivery milestone. So this leads to instant payment becoming a little less relevant. The second biggest problem statement is the legacy systems and inertia, right? So enterprises, especially SMEs, they are entrenched with their accounting systems and paper-based invoicing. And change management becomes very difficult for these firms to re-engineer the system which already works. And then becomes the lack of standardization. So, each firm has its own way of managing the payment terms, formats, reconciliation. There is a perception of risk. Trust deficit becomes, one perspective to look at, specifically in the cross-border B2B settings. So fraud, FX risk, regulatory gray zones, these are some of the parameters that needs to be looked upon by the B2B payment platforms.
Can you identify the main barriers to B2B payments digitization in Asia Pacific, and what are we doing about this?
So the B2B payment is largely rely on the ERP and the treasury management systems for smooth and efficient processing. But we observe very limited corporates have modernized their ERP or treasury systems in order to be compatible with the digital and automated payment solutions. And second is from the cost perspective, especially from the bank's perspective. The payment fees only represents very limited portion of the bank's revenue book. But investing in a new payment platform is very resources consuming. So in a B2B world, some large corporates only maintain one or two main banks as their main banking partners. Most likely, those corporates, they prefer to partner with tier 1 or tier 2 banks. So this puts some smaller banks in a dilemma of weighing cost and benefit of investing large amount of the resources into the B2B payment platform.
Countries like Indonesia, Singapore, Vietnam, they are having a varied rules across various borders, right? And the FX control and data localization laws also add further restrictions. The second biggest issue or barrier that we see is the low penetration of real-time infrastructure. So countries like Singapore have fast, while many other lack interoperable RTGS and real-time rail for B2B payments. Payment rails are either domestic or fragmented between banks and fintech. While cash and check culture still prevails, there are a lot of tier 2 and tier 3 business environment, specifically within Philippines, India, and Thailand, where cash and check still dominates informal supplier relationships. Then comes inadequate digital onboarding, right? So SMEs today have lack of digital identity, digitized procurement process, which makes onboarding process a little harder for the banks and fintechs. What we also see as the fifth and the most important barrier is the cost and ROI concern, right? So digitization today requires a lot of upfront investment, while many SMEs are not yet convinced or have a short-term, outlook towards switching over.
Looking at the bright side this time, what opportunities do you see for banks to expand their services in this space?
So actually, we explained the payment system into the B2B world is not a silo application. Instead, the payment play a vital role to help the enterprise to manage their overall working capital and cash flow. So the banks that haven't built the payment into the working capital product bundle for their corporate and commercial banking clients should plan for that. And second, we think the bank should expand it into the new client segment because the bank already get used to serving for the large corporates. But in some economies, especially in the Southeast Asian region, some countries' GDP were largely contributed by the SME, which is the small or medium-sized enterprise. So investing in an innovative payment solution can assist those local or regional banks to acquire new client segment and differentiate themselves from their banking peers. So the third, we think the banks should pay attention to some of the new payment trend and initiative. For instance, like the CBDC and also the cross-border payments, the real-time cross-border payments. So in Southeast Asian region, so the central bank from Thailand, Malaysia, Singapore, Indonesia, and Philippines aim to connect their fast payment systems with the Nexus. So the Nexus actually is a payment scheme which driven by the Bank of International Settlement.
Banks today can become a lot of platform players that offers API for invoicing, working capital, and payment, right? This means embedded systems within the ERP and procurement tools that really helps businesses to flourish. The second is the supply chain financing and dynamic discounting, right? So today, digital payments really help for the cash flow visibility, which enables invoice discounting, factoring, working capital loans that are today tied to payment data, right? So if you would have a platform that kind of offers this through, that would be really helpful. The third one is the cross-border B2B payment platform. So APAC trade is booming. We know that banks can offer multi-currency wallet along with automated FX and blockchain settlement that really helps to ease the international trade that happens today. And fourth one, you can partner with fintech, right? So fintech ecosystem for SME onboarding, risk scoring, smart reconciliation tools that would really help to speed up the B2B digitization process. The final is payment data monetization, right? So you can today have AI-powered financial dashboard, cash flow forecast, and some of the credit risk models that can help you to tailor to the B2B clients.
Thank you so much for your time today, Mary and Namit.
Okay, thank you.
Thank you.
Once again, that was Mary Yan, Senior Director Analyst at Gartner, and Namit Gold, Managing Partner and Co-Founder at Ken Research. For more news, visit asianbankingandfinance.net.